What's up everybody, I'm Rose and today I'm going to talk to you about the 6 things you need to know to get started investing in the stock market. This is a good video for total beginners who just want to get a little more educated on how to get started in the stock market. So the first thing you need to know is what is the stock market and how does it work? Think of the stock market as a big digital marketplace like Amazon, but instead of buying and selling products, you're buying and selling stocks. Now, stocks are pieces of ownership in businesses, fractional pieces of ownership in real companies. So when you buy a stock, you're essentially buying a part of a company. So if you buy Walmart stock, you become a part owner in Walmart. Before the stock market, it was a lot more complicated for the average investor because you'd have to track down the owner, make an offer, negotiate, and go through this whole process that was complicated and expensive and out of reach for most investors. Now, thanks to the stock market, you can essentially buy any company you want with the click of a few buttons. The second thing you need to know is the difference between investing in stocks and trading in stocks. Trading is not a reliable way to make money in stocks. It's just not the same thing as investing. With trading, you're usually in and out of a stock in a very short amount of time, sometimes just a few days, a few minutes, or even just a few seconds, and you're in it to make a quick buck. Traders rely on a type of analysis called technical analysis, where you rely on chart patterns and technical indicators to tell you where prices are going. A lot of people want to get into stock trading because it seems glamorous and it seems like a fast and easy way to make a lot of money. But the truth is, it's a losing game for most people, and I'll tell you why. There's a lot of super sophisticated players in the stock market that make their living trading, and they have lightning fast algorithms, and often they're working for really well capitalized financial institutions that you just generally have no edge against. It's kind of like trying to win a race against a Ferrari when you have a Toyota. It's possible, but it's unlikely. So even though stock trading sounds really cool, I would really think twice before risking your life savings on it. Investing is a totally different story. With investing, you're usually holding on to stocks for a really long time, probably years and years, because it takes a while for companies to reach their full potential and give you the maximum profit. And instead of looking at price charts and doing technical analysis, you're doing something called fundamental analysis, which is analyzing a company as an operating business. So you're going to be doing things like reading annual reports, reading through financial statements, listening to earnings calls, and trying to assess how good the management team is. And the best thing is, as a small investor, you have the edge against the larger financial institutions and the professionals. And that's because these professionals are often up against a lot of pressure to report their returns every quarter. And if they don't beat the market, they lose their jobs. So that makes it really difficult for them to keep a long-term perspective. And that's the key to successful investing, keeping a long-term perspective. And you know what? You have access to the same information that all the big players do. You'll find everything you need to know about a company by looking up its SEC filings. This is available to anyone with an internet connection, and I'll show you exactly how to do it later in this video. Okay, and the third thing you need to know is how to find companies to invest in. The best way to do this is to think about the products and services that you're already using in your everyday life, and then find out if you can buy stock in those companies. Just thinking through a typical day in your life will give you at least 10 ideas. You wake up in the morning, brush your teeth, you pick out your clothes, and get dressed. It's cold outside, so you put on your coat before heading to work. Before you get to your office, you make a stop at Starbucks for your morning latte. When lunchtime rolls around, you go to Chipotle for a burrito, and you scroll through Instagram on your iPhone for a few minutes. After a long day at the office, you pick up some groceries for dinner at Whole Foods, and check your email while standing in line. You get home, make dinner, and afterwards you chill on the couch while searching for cheap flights on Expedia.com to start planning for an upcoming long weekend. 10 ideas! How easy was that? You already know a lot about a number of companies just because you use their products and services in your everyday life. So start there. If you want to be a good investor, you're going to have to understand your investments inside and out and do a lot of research, read a lot of company reports, and this is all easier to do for companies that you actually like. This approach aligns your investing with your values. Personally, I don't want to invest in companies that are destructive to the environment. I drive an electric car, and I'd never invest in oil drilling companies. I'd probably want to look into more planet-friendly companies like Tesla and Solar City, whatever that Elon Musk company is called. Same with you, looking at the products that you use in your life is an awesome way to find investment ideas that align with your beliefs and values. The fourth thing you need to know is that you can only buy stock in publicly traded companies. That's because private companies don't issue stocks. Only publicly traded companies do. All businesses start out as private companies, and once they're able to meet certain requirements, they can choose to go public and start issuing ownership shares in the stock market. Most large, well-known companies are publicly traded, but there's quite a few that are still private. So examples of companies you can't buy stock in because they're private are Uber, Airbnb, Sephora, PetSmart, SoulCycle, and there's a whole lot more. So now that you have a list of companies that you potentially want to invest in, the next step is to figure out which ones are actually publicly traded. The best way to find out if a company is publicly traded or not is to just Google it. Go online and type in, "Is Sephora publicly traded?" or whatever company you're looking at. Oh, Google, you're the best. The fifth thing you need to know is how to quickly be able to tell if a stock is a good investment or not. That's because before you spend a bunch of time doing more research into anything, you want to be able to make sure that it's worth your time. So the best way to do this is to use a website like Morningstar, where you can see all of a company's financial statements all on one page. You want to be able to see 10 years worth of history. That way you can look for a track record of earnings. Earnings is the company's profit number, or its revenue minus expenses. When you look at the earnings over the last 10 years, the earnings should be trending upwards and they should be fairly consistent. Let's take Ulta Beauty as an example. Here you can see that earnings have always been positive and it's been increasing every single year for the last 10 years. You also want to look at a metric called return on invested capital, or ROIC. This tells you how well a company is using its money to generate returns. As an investor, you want to get as high of a return as possible with as little capital as possible. So stocks with high ROIC basically give you more bang for the buck. So if you look at Ulta has amazing ROIC numbers. They're in the high 20% range pretty consistently. So right away, just by looking at Ulta's earnings and ROIC track record, you can tell that it's a stock worth looking more into. On the flip side, let's look at General Motors. GM's earnings numbers are all over the place. Some years it goes down, then goes back up. Then most recently, it was negative. Its ROIC numbers are pretty sad too. Never invest your money in a business with a sketchy track record. If you ever come across a stock like this, just cross it off your list and move on. Last but not least, you need to know where to find good information for the stocks that you want to do more research on. I always like to start with primary sources rather than blogs and news articles because I don't want other people's opinions to cloud my judgment before I formed my own opinion. So the number one place to start your research is with the company's official filings. All publicly traded companies are required to file annual and quarterly reports with the SEC, which is a government agency that regulates the financial markets. You can find these reports online at sec.gov under company filings. The annual report is called the 10K and the quarterly report is called the 10Q. And these will have all of the company's financial statements for the period, as well as a bunch of other really useful information. It's all written in plain English, and these reports will literally tell you everything you need to know before you invest. Another great source of information is the company's quarterly earnings calls. Every quarter, when the company reports its profits for the period, the CEO and the management team will hold a live earnings call with the public. It's open to anyone, and you can ask questions, and they'll give you a lot of great color on what's going on behind the scenes in the company. It's a really good supplement to everything you research and learn in the annual reports. And if you missed the live call, you can usually get the recording or the transcript on the company's investor relations website. Now, I have a question for you. Have you started investing in the stock market? Why or why not? Let me know in the comments below because I'd love to know. That's it for today. Thanks so much for watching. I really appreciate you, and I hope this video helped. I had a blast making it. Make sure to subscribe and always remember to live life on your terms. Cheers.